Greetings and thanks for dropping by for the latest edition of Mentor Mike's Market Movie. Today is Friday, the 7th of September, 2012. We've got the chart all set up for our replay today. But before we get into that, let's take a look at the charts for the rest of the week, this short after Labor Day post-holiday week. Monday was Labor Day, so we don't have a chart for that. On Tuesday, we had this little sweeping guy here. Starting off in the pre-market, there was a 1, 2, 3 bottom, and it looked like we might have a transitional move here, so I went long, just barely hit the initial target, and then was promptly stopped out. Then the market broke to the downside. Same thing happened again. Barely hit the first target, got promptly stopped out. Then we sold off again right after the open of the day session, and there was a nice drop that allowed me to hit all three targets. Then we had another 1, 2, 3 bottom, caught the long move, had another 1, 2, 3 top, and caught a little bit of a short move right before the end here. So this was basically a day with two turning points, low, high. This was Tuesday. Here's Wednesday. Now, I'm using a 1-minute chart that has a 5-minute combo. The 5-minute part is this sort of ghostly looking light steel blue parabolic, which is from the 5-minute chart. And that's to help me see the turning points. And notice that it only consists of the day session. It starts at 6:30 and it ends at 1:15 here. So our low is inside of this bearish module. The high is inside of the bullish module, and then the low again here. So we start off again in the pre-market with a bullish with a trend trade, and then the next one was a short trade here that looked like a potential transitional move. And that was justified by this divergence. We've got higher high on the price, lower high on the MACD. This didn't go very far. The trend-defining moving average made for some pretty strong support. Then there was another with the trend trade. This one I didn't actually take. I had something else I had to do. And then there was another transitional move, or what appeared to be, that would have been a good trade, and that was justified based on this chunk of divergence, also with the MACD. And then we had another with the trend trade, also I was not around for. But then, after taking care of business, I came back and I caught this short trade. This looked like another transition, but this was justified by a 1, 2, 3 top, and this one made some pretty good money. And then we had two more little short with the trend trades and ended up with a low, high, low. Then this was Thursday. Caught the initial bullish move here in the pre-market. Unfortunately missed these two nice trades, which was pretty much all there was for most of the day. And it's a real problem when you have days like this if you don't catch that first big move, because the rest of the day is pretty much sideways. So it was a real dull day. I looked for an opportunity to go short. There was just barely enough of a drop to hit the first target here, plus I had to wait for close to an hour, as you can see. But then the breakout to the upside provided a pretty good trade at the end. I think hit two targets there. So we had a high, low, high. Now, look at this mess. This was today, and this was a very challenging day, to be sure. And this is the one we're going to replay today. And we had a pretty good with the trend trade in the pre-market, and then had this short trade, and actually this drop here was the result of the employment rate report, which I knew was coming out at 5:30. And when I saw this little spike with the white moving average still moving below the red, I thought this is probably the floor traders in the big S&P setting up for that report, and so I went short up here somewhere and hit all three targets in the blink of an eye because this thing just dropped like a stone. Then the market bounced up, but the white was still heading down, so as soon as it turned around, I went short again and caught most of that. Went short one more time over here after the start of the day session, and I really should have been going long at this point, but this was not the best chart template to use for a day like this. We're going to use a slightly different one, as you'll see for the replay. But it looked like I should be going short here, and I got in, and what happened was, of course, it hit my target but did not fill it and then receded back up. And when it came back down, it touched the target again and still didn't fill it. And so when it started to go up, and my stochastic, as you can see, was really oversold and starting to rise, I pulled the plug on the trade and took a loss. But luckily, it was only a few ticks, and I was able to still finish in the money. But had a loser. Plus, as you can see, I was in the market for quite a while, at least an hour. And then to finish with a loss after that is pretty dull. But anyway, I just waited around and I saw the market kind of dip and start to go back up. Now, here's something to recall. When you have a choppy sideways mess like this, it is some type of corrective Elliott wave. And so what does a corrective wave do? It usually separates two impulse waves. All right, well, the impulse wave that follows this is going to be heading in the same direction as the impulse wave that led into it. So what led into it was this bullish move over here. Consequently, I knew that the odds favored the breakout, the final breakout, to be to the upside, and that's exactly what happened. But by this point, I was tired out and decided not to take this trade. We'll take it in the replay, but I could have picked up a good deal more points, as you can see, if I'd taken that last rally. But I was pretty ready to be done with this day, and boy, what a headache. Anyway, our last chart of the day is the delta turning points, and remember last time I said that Friday was really kind of a choppy mess. All the other turning points had their own little momentum modules created by the parabolic, but we had a bunch of extra spaces on Friday, and it kind of made sense when I saw what happened on Labor Day. You know, on Labor Day, the market opens on Sunday night, and so the pre-market actually goes to like 8:30 Pacific time, and that's when it shuts off, and the holiday begins, and then it starts again in the late afternoon for the next day. So there was one turning point on Monday, Labor Day, and so the total number of turning points still kind of worked out over the course of the week if you count these extra ones on Friday. So we had 1, 2, 3, 4, and then we had these two kind of going with Labor Day, and then we had a 1, 2, 1, 2, 3, 1, 2, 1, 2, 3, 4, and now the market's heading up here, so this suggests that Monday we're going to start with a high, and so we'll wait and see. Now, with the exception of Thursday and this big long rally, all of the turning points have their own momentum module here with the parabolic. Only these two don't. I still think that this is a valid count for what's going on. All right, so that's our day, and this sideways mess is what we're going to do the replay on. And so we knew that we're probably going to have a high as our first turning point, and so the question is, where is it going to finally end up? So let's get back to our chart here. Now, this is going to take a little longer than usual because I can goose the speed up to 50 times normal for a little bit, but there's a lot of places where I know a signal is about to materialize where I have to really slow it down, because one of the difficulties with today was not only its incredible sideways choppiness, but also there were some places where the market really moved lickety-split. And it's a bad combination when you've got a lot of zigging and zagging plus a fast-moving market. So I'm afraid that if we have the replay speed too high, we're going to really mess things up. So we'll do our best to get through this quickly, but I'm going to have to slow it down a little bit to show you where the actual trades are. Now, one of the things we want to pay a lot of attention to is our red moving average and our dash green trend defining moving average. Generally speaking, if our red is above the green, we're going to be looking to go long. So we're going to see that the red is going to undulate around the green quite a bit. But remember that since we've got a bullish lead-in, the odds are that the ultimate breakout will be bullish as well. So basically, we're going to be looking for long trades, at least initially. And I am using this chart template instead of the one that I had earlier today, because I think this is going to be a little bit better. We have the MACD situated where the 0 line is our trend defining moving average, and our oscillator and signal line are the red and the blue, and then we've got the the white histogram here. So I think we're ready to get started, and we'll start off at some increased speed here. Drag my little control panel out to where we can work it. But when we start getting close to where I know a signal is, usually I just trade this, the signal straight away. But in order to show you where the trades are today, I have to fudge just a little bit more than I would ever do otherwise, and pay attention to where I know the signals are. Okay, so off we go. And we start down. Okay, the parabolic is flipped on the price. Now, I've paused it and I'm going to start slowing it down just a tad here. I've got it at 10 times normal speed. All right. Now, we might have even waited a little too long already. This thing popped up pretty high, as you can see, but let's get long. And we'll take our first trade and get started again. We'll do 20 times normal speed here and see what we can get. Well, we hit the first target, haven't moved the stop, so I'm going to move it manually. Whoa. And that was something that obviously spooked the market. It may be preparation for this. It's the unemployment rate report, which was due out at 5:30 Pacific time. And as you can see, the actual figure turned out to be 8.1%, which is actually slightly better than what was predicted, which is 8.3. But in any event, this was probably a precursor to that, and the market dropped like a stone, as you can see. But notice that our red, white, and blue is still very much above the upsloping, trend-defining moving average here. So we're still looking to be on the long side. We'll start this up again. And stochastic is heading up a bit, but the MACD is not. The MACD is probably the most helpful when the market gets like this, because the stochastic can be a little bit too quick and a little too too unreliable sometimes. Okay, now let's proceed a little bit more slowly. Okay, now we flipped the parabolic. Blue is above red. Got a bullish cross on the MACD, and we're above the 50% level on the stochastic. So normally we would think about getting long right here. However, notice the time. It's 5:27, and in just a few minutes we're going to have that unemployment rate report. And I know from experience that this being an election year, that particular report, being the meter of the economy that it is the most likely report of all to create some type of spike in the market. And I'm fairly certain that we're going to see a bearish reaction here. So given the fact that the red moving average is sloping down, the white is headed up, but we've got our red under the green over here as well. What I did was I basically traded on the basis of fundamentals here, and I went short right here. And you'll see what happened. Thank goodness I did, because even at normal speed, this market just dropped like a stone. Watch this. We'll get short, and I will mark the trade with an arrow and observe what happens. I'll only put it up to 10 times normal speed. And boom. Yeah, there we go. So we hit all 3 targets in the blink of an eye. Now we can speed this up a little. All right, now the price is way back where we started again. So I'm going to slow it down, and as soon as we see the stochastic turn around, I'm going to get short because look at our trend defining moving average is actually sloping down. The red's under it, the white's under the red. So this is just a little sort of whiplash reaction to that initial drop. But I think the market still wants to go lower. So let's go just a teeny bit here. Get it up to 10 times normal speed. And the price is starting to come down. And again, it kind of looks like we should be getting ready for a long trade, but you're going to see in just a second here. Again, look at the moving averages. They're very much in a bearish configuration with the exception of the blue one, which is, of course, practically tantamount to the price itself. All right, we've got a bearish hook here, and on the stochastic, I'm going to go ahead and short this thing right now. Okay, we're starting to curve around again. All right. Notice we got a bullish crossover on the MACD already. Stochastic is heading towards the 50% level. And what we're going to end up with here is probably going to be one of these. Your basic Ken Roberts style 1, 2, 3 bottom. So let's see if we can get this thing heading up more. We'll leave it at about 10 times normal speed. Stochastic has touched the 50% level, but hasn't quite gotten there yet. We're also right at the start of the day session here. Looks like my number 3 point is decidedly lower. All right, now this is where the number 3 actually came. And we had the crossover, lost it, regained it, touched 50%, came down, have touched it again, and in the meantime we've got the parabolic flipping here. So let's go ahead and reverse Okay, and we're stopped out. All right, the price is way up here. Don't quite have the crossovers yet, so I'm going to slow it down. And there they are. Okay. remember, a lot of times between a high and a low, you get the in-between zigzag. S's and Z's, remember? Okay, so let's get long. Okay, stopped out. Now, notice that we have another that's what justified this trade. Okay, let's see what's up now. All right, notice that our red signal line is now above 0, and our red moving average is right about on top of the trend defining moving average and looking like it wants to cross. So even though we're sloping down on the trend definer, we're probably going to bottom out and start to move this way. So we're looking for an opportunity to get long, and the price is already up there pretty good. So let's go slow. All right, got a pretty good hook on the stochastic and the MACD. So let's get long. Boy, we are having a hard time hitting that target. Imagine sweating it out at normal speed. Not fun. A lot of people see a day like this, they just take the day off. There's something to be said for that. Finally. Okay. Well, we're clearly above the trend-defining moving average, and you can kind of see that even in this little area right here, it's kind of bottomed out and is starting to head up. So we want to be looking for an opportunity to get long again. I think we can probably speed it up a little bit here. Oops. I missed our mark here, but let's see if we get a better chance to go in. The stochastic is already kind of overbought here. Not a good place to get long. You want that stochastic heading up. So let's see if we get another shot. Probably just as well. We didn't get long right there based on that. Okay. Now we're above the 50%. We got the crossover going on. Let's try it now. If we had gotten in there, we would have had to sweat out that part, but we still would have been alive in the trade. Okay. I think we can probably speed it up a little bit too. Stopped out. Okay, well, we're still clearly above the trend-defining moving average on the MACD. Wavering a little bit on the price. But remember, the ultimate breakout should come to the upside. So we got to be very cautious before we think seriously about getting short. Okay. Okay. Almost got a crossover here. And almost got it here. Stopped out. Watch that MACD. We start getting close to a crossover. We'll slow it down a bit. We've flipped the parabolic on the stochastic and the price. But the MACD is still looking pretty bearish. Well, price has flipped back, so it's the stochastic. Remember though, our ultimate breakout should go to the upside. red moving average is starting to break below the trend definer, but the price just started moving up again. All right, let's slow it down. Okay, crossover on the MACD, stochastic touching 50%, price about ready to break back above the trend definer. Blue and white also ready to move above the red once again. We're only having a 3-tick target here, and look how much difficulty we're having hitting it. Okay. Okay, notice that the stochastic broke above the 50% way over here, but it took until right now before we got the cross on the MACD. So like I said, when you got this kind of market, sometimes the MACD being a little more sedate can be a big help. The stochastic can actually be too quick. All right, looks like we have at least one more long trade working for us here. Okay, it's past 1 o'clock. 2 of the 3 targets. Okay, it's 12 after 1. I would normally be stopped out automatically at 10 after. So we'll go ahead and close out here. And we'll just run out the clock. And we used 9 contracts, 3 targets today, and made $3,175 despite all of the challenges. And let's see how many trades we had. I have to compress a little bit here. Okay, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And it looks like our turning points today, let's see, this one needs to be a high, so this is the high. And this would be our low. And we end up with a little zigzag here. And since the market's still rising, we don't know that this is the end of the move. Quite likely this thing will keep going up and we'll have the final high on Monday morning, but we shall see. So this looks like what we had for the week. Thank you very much for joining me, and we'll see you next time.